Good afternoon. On behalf of the Center for Community Progress, I'd like to welcome you to today's Cornerstone webinar. My name is Justin Goddard, and I serve as the Senior Program Officer for National Leadership in Education here at Community Progress. Cornerstone is our webinar series, which equips participants with the building blocks to understand and solve tough challenges related to property vacancy, abandonment, and deterioration. For today's Cornerstone, we are joined by Jill Roberts, Karen Black, and Payton Heins. Jill Roberts is an affordable housing advocate who has been working to address the needs of low to moderate income Philadelphians for more than 16 years. Most recently, as director of the Healthy Row House Project, Jill has worked with countless partners in the city of Philadelphia to develop and now manage the Restore, Repair, Renew Loan Program at Clarify, a Philadelphia-based nonprofit empowering individuals to achieve financial resilience and positively impact their communities. This program gives low to moderate income homeowners in Philadelphia access to much needed low interest loans to make repairs for the benefit of their health and the improvement of the community's aging housing stock. Karen Black is the CEO of May 8 Consulting Incorporated, a woman-owned social impact consulting firm. She is also a lecturer at the University of Pennsylvania, Senior Research Fellow at the Drexel University Lindy Institute for Urban Innovation, and the co-founder of the Healthy Row House Project, an initiative to improve access to private capital for home improvement loans that has leveraged $100 million in public and private capital. Her firm, May 8 Consulting, performs policy research, analysis, coalition building, and facilitation to form innovative and creative solutions to the seemingly intractable problems facing urban, suburban, and rural communities. Finally, Payton Heins serves as the Director of Michigan Initiatives here at Community Progress. In this role, she manages the organization's portfolio of work with communities across the state of Michigan, helping them to develop new approaches to vacant, abandoned, and problem properties. Before turning it over to our panelists, I want to mention that we will allow time at the end of the presentation to answer questions. If you have a question during the presentation, please click on the Q&A icon at the bottom of your webinar browser and type your question into the Q&A box. We will share presentation slides and a video recording of today's presentation in the week following. Be sure to take a moment to complete the post-webinar feedback survey, which will automatically appear in your browser upon exiting the event. Lastly, if you experience any technical difficulties, please send us a message by clicking on the chat icon at the bottom of the browser or by sending an email to jgoddard@communityprogress.net. And with that, I am going to turn it over to Payton. Payton, I believe you may be muted.
There we go. How's that, Justin?
That's better.
Great. I trust you can see my slides just fine.
Yes.
Excellent. All right. Well, thank you all for joining us. Justin, thank you for that great introduction. As Justin mentioned, I oversee our work in Michigan for Center for Community Progress. And it was really through this work in Michigan and working with Michigan communities that we've been hearing about the need for more expansive residential repair resources, both for homeowners and small scale landlords. And as that, or in response to that, those concerns, and thanks to the generous support of the General Motors corporate giving, we've been able to focus specifically on this issue of residential repair needs and pull together some different resources like today's webinar to better support communities wanting to either create or to enhance repair assistance programs. One city that has been particularly focused on addressing property repair concerns is Philadelphia. So we wanted to invite two experts from Philadelphia to share about those particular efforts. I'm going to start us out at really that high level view, highlighting the need for repair assistance programs and some of the different features of program design. Then we'll turn to Karen, who will provide us with the Philadelphia context, and Jill will walk us through the program level based on her experience managing the Restore, Repair, Renew program. The need for repair assistance, it's not a new concern in the US. In 2017, over 35% of housing units were in need of repair. For some communities, this number is even higher. Another study estimated that repair cost needs in the US were at about 126 billion. Most of those households needing repair assistance, it was in the cost range of $1,000 to $5,000 in repairs. Researchers found that extensive repair needs are common, or really most common among low-income households, and our most common repair issues were leaks and mold, often caused by damaged roofs, and also larger structural concerns. On top of high repair needs, many owners lack the resources to make those repairs. In 2019, nearly a quarter of all homeowners experienced a housing cost burden. For someone who's already paying more than what's considered affordable on their basic housing costs, they're unlikely to have those excess funds to make important maintenance and repairs. Many neighborhood housing markets also cannot support the cost of larger home improvements. One study found that homeowners reduce their maintenance expenditures if the value of their home fell below this improvement or construction costs. And access to home improvement loans has also been a challenge. Over a 7-year period, only 2% out of 46 million residential loans were for home improvement. Denial rates were higher for smaller home improvement loan amounts, and particularly denial rates were higher for low and moderate income applicants, non-white applicants, and applicants in majority non-white neighborhoods. Deteriorated property conditions and limited owner resources to address them were already concerns prior to the COVID-19 pandemic. In the past year, we've been seeing heightened unemployment, which is further constraining resources. Homeowners may be cutting back, and many landlords have seen a disruption in their rental income if their tenant has been struggling to pay rent. And material and construction costs have also skyrocketed, making property repair even more expensive. Not only is there this demonstrated need in communities across the country for repair support, but research, anecdotal examples have shown numerous positive community impacts of investing in residential repair. The probably most heavily researched area is the connection between health and housing. Poor housing quality is connected to higher asthma rates, higher lead exposure rates in children, greater hospitalization rates, and reduced school readiness in children. Home repair has shown to help reduce those negative impacts and contribute overall to healthcare cost savings. Home repair investments also help to stabilize neighborhood housing markets. Investing in repairs can help prevent property deterioration and future vacancy. An analysis of American Housing Survey data found that homeowners were more likely to abandon a home with significant repair needs than one that was in good condition. Home improvements can improve property values and increase the duration of residence for homeowners and their neighbors. Both of these things are important, for homeowners whose largest life investment is often their home, and just for neighborhood stability overall. For the public sector, investments in home repairs also help redirect service delivery, particularly related to code enforcement. Cities take a less punitive approach to address code violations by helping to get resources into the hands of struggling property owners, rather than ticketing and placing an additional financial burden on owners. This allows code enforcement to really concentrate its efforts on the bad actors rather than under-resourced owners. And my colleague, Matt Kreis, he does a really great job of discussing this more equitable and effective approach to code enforcement in one of Community Progress's other webinars. So I've linked that presentation for you at the end of mine for anyone who's interested. There are many different models of home repair programs, and in just a few minutes, we'll be hearing from Karen and Jill to talk about some of those different models being applied in Philadelphia. But these programs can serve property owners in a variety of ways through grants, which seems to be most common, especially for homeowner-specific programs, and is generally easiest to administer. Other programs will provide forgivable loans to encourage homeowners to stay in their home longer, or deferred loans, which become due upon sale or transfer of the property, and low interest loans that offer more favorable repayment options than the private market. Or they may look at a combination of a grant and loan for maybe more extensive repair needs on the property. But all of these options require different levels of care and consideration in terms of vetting applicants and ensuring the applicant is successful in the program. There can also be a specific focus on what they fund. So some programs are specifically focused on correcting code violations or other exterior repairs like porches, siding, roofs as part of a broader neighborhood improvement effort. Or maybe they focus only on emergency repairs or addressing health risks. Many programs also target specific recipients. So lead abatement programs are more likely to focus on households with young children. Some repair assistance is focused just on seniors. The majority of repair programs are targeting households below certain income thresholds. And of course, the program itself can be funded in a number of different ways. The vast majority of programs across the country are supported by federal funding, specifically CDBG and HOME, which can have its own limitations with just those funding sources. There are a number of programs in the country that have expanded their funding sources to really help them extend their reach. So who they can serve, what repairs they can address, or even just to increase scale overall. For example, other funding sources have included philanthropy, corporate sponsors, establishing a revolving loan fund, bonds, real estate transfer tax, or possibly a housing trust fund that may pool a number of these different resources together. Programs can be managed in a lot of different ways. It makes more sense to establish in the public sector or nonprofit sector at the city level or county or regional level. Communities have also looked to a lot of different partnership opportunities to strengthen and expand their program, maybe from partnering with hospitals, which, as I mentioned earlier, a number of studies have shown a strong link between housing condition and health impacts. So there's a clear connection and interest with the healthcare system. Or maybe they've partnered with social service agencies to help identify applicants or administer the application process, or workforce development programs that could partner on providing construction contractor support. Determining the most successful model or models for your community really depends on your local context. communities should have a solid understanding of the need. Some of the questions to consider may be, what are our most common repair issues? So your code enforcement department, neighborhood associations can be really great resources for that. What's the average cost of those repairs? What is the total cost of those repairs when they're scaled up to the citywide or maybe the regional level? What are the characteristics of the homeowners needing repair support? Are they mostly seniors? Are they mostly within a certain income range? Would that income range allow them the ability to pay back a loan? So understanding who is in need will help ensure a program is reaching the right owners and scaled appropriately. And of course, looking internally to assess existing capacity and expertise to administer the program and do that at scale. And looking externally, there may already be other home repair related programs in your community that cover certain repair types or maybe specific income levels. Or you'll find partners who can provide additional funding or capacity supports depending on the gaps you've identified. Many programs, while they're well-intentioned, haven't fully assessed the needs and capacity to fill critical funding or other gaps. Often this leads to pretty narrow or inflexible programs that don't always reach those who are most in need in the community. And leaving you just with one final note, as your community is thinking about creating or enhancing a repair assistance program, you should really be looking closely at the American Rescue Plan Act and forthcoming infrastructure package. So in just a matter of weeks, US Treasury is going to be transmitting funds to cities, villages, townships, counties, and states as part of the American Rescue Plan. We're still waiting for official guidance from US Treasury on allowable uses, but there are currently pretty broad definitions in place that could allow for community and economic development efforts, a repair assistance program potentially being one of those. Some cities are already discussing how a repair program could fall under this funding source. And in addition to the American Rescue Plan, President Biden proposed the American Jobs Plan, which takes an expansive look at infrastructure to include items like housing. What gets included in the final bills will become much more clear in the coming months. So I would like to now turn to Karen to talk about how local partners in Philadelphia have identified local residential repair needs and shaped different programs to address those specific needs.
Thanks so much, Payton. Okay, we're going to try to share my screen now. And it's on the wrong slide, of course. Hold on one second. Okay, it's giving me a little trouble just for the hell of it. Let's try it one more time. And Justin or Payton, if you can tell me if you can see this.
Yes, so we can see the slides.
Okie dokie, let's get to the beginning then. That's great. Thank you for that. Payton really gave this great overview of home repair around the country. And I get to talk about Philadelphia, which is one of my favorite topics. And the other thing that I really love talking about is home repair. And I've been talking about this since about 2006. My first report came out saying that we need to preserve our existing affordable housing and the importance of doing it rather than just focusing on new construction and ribbon cuttings. But I don't think there's ever been a time as important as right now, when it's been a national priority to keep households in their homes. right? And the condition of their homes so clearly affects their quality of life, the quality of the neighborhood, health care costs, and so many other things that are mentioned on this slide and that Payton talked about. If you look at the bottom of the screen, you're going to see the classic Philadelphia row house. And this is on all of Jill and our slides because we're really proud of these houses that make up about 70% of Philadelphia's housing stock. They were first shown to the world at the World Fair in Chicago in 1893, the model working man's house. And many of these are only 1,200 square feet, but they're incredibly durable and resilient and affordable. And when you look at Philadelphia, it's important to see that about 75% of our houses are over 50 years old. So they need some work, they need some maintenance. And about 38% of our homes are owned by low-income homeowners. We have the second highest rate of low-income homeowners owning these homes of any city in the country. Detroit is number one. And excuse me, this is really important. And the reason is because over 42% of our houses are what they call generational houses, which means they were passed down through inheritance. And at the time they were passed down, they already had substantial deferred maintenance in many cases. 78% of Philadelphians over age 60 own their own home. And as I'm talking about homeowners and these statistics, we can't leave out renters, right? 52% of Philadelphians own their own home. That means 48% are renting. And one of the things we found during COVID is that many of our small landlords are no better prepared for having their income cut off. We have an awful lot of low-income mom and pop landlords who inherited a house from their aunt or their grandmother and are doing their best to rent it out, but don't have a lot of resources. As a result, these wonderful brick houses that I say are the ones that the big bad wolf could huff and puff and not blow down, time has done that for us, right? Demolition by neglect. They have just been occupied by people who didn't have a lot of money to spend on these houses. And sometimes they are literally falling down on us. In 2015, we had a mayoral race and the Healthy Row House Project was founded. And Jill is the director, and I'm one of the co-founders. And the whole premise of this was, it's time to really take care of our houses so we don't lose any more, so we preserve that affordable housing. And I've been at this, as I say, since 2006, and our current mayoral administration, our city council president, and our city council generally have been phenomenal at putting more resources into this, at bringing it to scale, and adding some new innovative programs. And that was what I want to talk about. But back in 2015, when we were trying to convince the mayoral candidates and the council candidates that this was an important issue, we wanted to do that with the best data at our disposal. And we brought in the Reinvestment Fund, which is a community lender here in Philadelphia with some really great data analysis skills and abilities, and started looking at what are these repairs we're talking about. And I want to point out at the top of the slide, it says common health related home repairs. I would argue that all 134 participants on this call have some home repairs they need to make, right? I certainly do in the home I'm speaking from now. But we're looking at severe enough that they pose a hazard, that they could affect your health, that they could affect the viability of the building. And we found that the most common was leaks, mainly roof leaks, inadequate heating, right? No surprise there. What was surprising was we found that owners were more likely to have home repair needs than renters. The common wisdom up to this point had always been that rental housing was in much poorer condition. And this was also a surprise. We knew that about 40% of the people who needed help making home repairs were very low income. Philadelphia is the poorest big city in the country. What we didn't know was that moderate income block, that rose-colored block there, that about 31% of the people who needed home repairs had incomes between 36,000 and 85,000. And that sparked this really interesting discussion in this city about whether some of the people who need home repairs could afford loans. And loans would be paid back and generate a revolving fund so that we wouldn't just throw grants out the door and then wait for more money to come, right? Is it possible? And when I talk about, is it possible for them to pay loans, I want everyone on this webinar to be thinking about, could they take on $99 a month in addition to their current budget? And the reason why we say that is we also looked at what it would cost to make these repairs. And for about 54% of the people in the city of Philadelphia who needed repairs, they could do it for under or about $10,000. And a $10,000 loan at 3% interest is about $99 a month, assuming they're paying it back regularly, right? So 3% interest is relatively low interest. Who could afford this? And it provoked the question, and if they could afford this, why aren't they taking a loan out on the private market? And so we looked further at the data and we found, this is the most recent data we had back in 2015. I'm going to update it for you. There were 24,000 homeowners who sought repair loans, and 62% were denied. Now, more recently, 2 years ago, the Philadelphia Federal Reserve Bank did a study and found that in the Philadelphia region, so not just the city, but all the suburbs as well, in low and moderate income neighborhoods, the denial rate was 75%. So people want loans and aren't getting loans. And why is that? One reason is that the cost to the bank is the same whether you take out $10,000 or $400,000. So there's a real bias towards approving loans for larger amounts. And we found that. We found that your chance of getting a loan is much greater the more money you needed. So if you just need $10,000 for a roof, you may not get that loan. We also found that credit scores were an issue. And between 2018 and 2019, half of all denials for home improvement loans were due to credit scores. In Philadelphia and most places, I'm working now on home repair issues, 660 is about the threshold for the average bank. They say if you have a credit score of 660, you can afford to pay back a loan. If you have a credit score less than 660, you cannot. You won't be likely to do so. It's an arbitrary algorithm, and about half of Philadelphia households have credit scores under 660, right? So they don't qualify for credit. And so we knew that if we were going to come up with a loan program, we had to follow something like Detroit's 0% loan program and extend credit farther. And this was particularly important because we found that white Philadelphians had higher credit scores than Philadelphians of color. The campaign that we called the Healthy Row House Project was very successful. And at our first debate with the mayoral candidates, one of the mayoral candidates who did not win, I'm afraid to say, had this wonderful quote that we have used regularly at Healthy Row House and is mentioned constantly in Philadelphia now. The most affordable home is the one a family lives in now. And it resulted in a $100 million bond issue being put into home repair, 60 million into a grant program I'm about to speak of, and 40 million into the loan program that Jill's going to talk about. So let's talk about an ecosystem of home repair programs. You know, I have been writing reports, all of which are on my website, madeconsulting.com, about the need to more effectively get money out there for home repairs and the need to do so at scale for a long, long time. And as Philadelphians and this amazing city council have started adding programs, we really have this entire ecosystem of programs available. We have grants. The basic system repair program that I'm going to talk about has been around since the late 80s. Jill's going to talk about loans to homeowners, a new program just started before COVID hit. Loans to small landlords, healthy housing programs. We have these amazing nonprofit programs, and then we have some innovative pilots. So let me just break it down a little bit. So we have one of the nation's most successful emergency repair grant programs for homeowners who earn under 50% area median income. As Payton said, these programs are often run by local government. They can also be run by nonprofits. In this case, ours is run by the Philadelphia Housing Development Corporation, which is a government-led nonprofit, just to confuse things. Grants are from $3,500 to $17,500. Back 15 years ago, you had to sign up as a homeowner for one or the other. So someone would come out to your home, inspect, and say, you qualify for the $3,500 because you have a quarter size hole in your roof. And then the wait list at the time was about 1.5 years. And when they came back, if they found that quarter-sized hole had become much, much larger, and that it had affected the electric, and it had affected the wall and structural integrity, they would say, you no longer satisfy the requirements for tier 1 at $3,500. So if you want, you can now apply for tier 2 up to $17,500, but you have to get back in the line and wait another 1.5 years. The city changed that, and now it's just a range, it's a continuum. Funding back then was primarily CDBG, it was federal dollars. As you know, those dollars come with a whole series of requirements, and they have been reduced markedly in the last decade. So Philadelphia now uses the Housing Trust Fund, which comes from recording deeds, recording of mortgages and deeds generally. In 2020, they're going to put in $1.6 million just from the Housing Trust Fund to this program. Bond proceeds, Jill's going to talk more about this $100 million bond that the city approved in 2016. And it is our fervent hope that Philadelphia will do what it's been doing for decades and use these new stimulus dollars to also stabilize our neighborhoods and stabilize this housing stock. We also have these astonishingly good nonprofits. We have a chapter of Rebuilding Together and Habitat for Humanity, each of which do about 100 homes a year in targeted neighborhoods and often on targeted blocks. We have an energy coordinating agency that does weatherization. We have the Philadelphia Corporation of Aging there at the bottom, which does adaptive modifications up to $2,700. And then we have this new body, an energy coordinating agency, and we have LISC's Home Preservation Initiative, which is working hard to create collaborative efforts between everyone who's working in this area so that we can most efficiently handle intakes and applications. We can make sure that landlords and homeowners get to the right programs, and we can layer on services to do a deeper dive on those homes that need a little extra help. This is my last slide before I turn it over to Jill, but I wanted to talk a few moments about the Landlord Loan Program pilot. This is the Philadelphia Rental Improvement Fund. It's a 4-year pilot program to give landlords who own fewer than 10 apartments in the city a loan at a rate of 8% interest over a 10-year term. And in return, they must maintain affordable rents for 10 years and they must fix all outstanding code violations. The loan amount is from $10,000 to $25,000. And I would love to be able to report on how this pilot is doing, but unfortunately, it started right as COVID locked down the city in 2020. So we don't know much other than landlords are deferring maintenance as they're having trouble collecting rents from their tenants, and they're not ready to take on debt. but this is a 4-year pilot, and we really want to see if we can help some of these small landlords make it through. The second one is a program from the Children's Hospital here in Philadelphia, the Community Asthma Prevention Program Plus. The hospital, with Rebuilding Together in the City, are putting $1.5 million into performing home repairs in those houses where children live who find their way to CHOP's emergency room 3 or more times a year. The premise here is that it will save on healthcare costs, and it will deal with the underlying causes of their emergency room visits. Okay, now I'm going to stop sharing my screen. I want to turn it over to Jill Roberts, who's going to talk about this loan program. Thanks so much.
Thanks, Karen. I'm now going to try with the magic, can I share my screen, and have it be seamless, which, well, there we go. I think I did it. It's a good day. So my name is Jill Roberts. I am the director of the Healthy Row House Project. I work at Clarify. I have worked with preserving affordable homeownership in Philadelphia for about 20 years now, because I count the years that I've been with Clarify. And it is, I think it's become a calling. So this has been a really amazing, amazing journey that Karen and the city of Philadelphia and Clarify have been on. And I'm going to try and get to the next slide. Oh, there we go. So this is our goal. And Karen shared with you that PHDC was doing that. Well, at the time, it was Philadelphia Redevelopment Authority that then combined with PHDC. And so the goal was the same, was to get capital into the hands of low income or moderate income homeowners who couldn't get it on the open market. And one of our council members said, for people who had just enough, it was still hard to get loans to repair their homes. There we go. So why loans? Because we can provide a sustainable source of dollars. We can fix these homes. We can connect homeowners with the capital they need. We can preserve that ever important affordable housing. Operate at scale, because the funds would recycle into a loan fund back in as people pay the money back. And this particular program would serve families who have too much income for a grant. Our grant programs in Philadelphia used to have a fairly low AMI that you would price out at, and they have increased that amount, which is fantastic. But it was also really hard if you were just a couple of dollars past that. You still couldn't get a loan, but you couldn't qualify for the grant. So you're sort of caught in that, like a donut hole, if you will. And some of the things that have also come out of this that we weren't looking at as much when we started was the preservation of intergenerational wealth. Karen mentioned family housing. Some people call it air housing, people where it's been generation after generation. And we all know that land and home ownership is wealth preservation. So what did the loan look like and how are we going to get there? We came up with there was a lot of conversation about what was the best way to make this happen. And finally, we landed here. There were other totems that we came up with, and this was the one that was most palatable to all of the people concerned. And it is really innovative, and it's a great public-private partnership. We have the private sector, which is our lenders, private business, which is the contractors who are doing the services, the bond proceeds, there's the public. And also the nonprofit support is philanthropy, as well as the city is supporting us and that work, which we couldn't do any of this without philanthropy and the city. And we all play off of one another, if you will. We're all putting something into this. We've all got a lot of skin in this game, and we're all hoping for success. And I think we're on our way. Some of the work that we also did was, what was the best way to get money to people? Would we put it in an escrow account? Some programs do that through the country. We were thinking, do we have the city hand it out? And really, we decided that it was best that the city backs the loans, this banks service them, but that those loans go to the homeowners. They need to make control what is purchased and done with that money. And the timeline that we had in the city for this, uh, wow, the bond was introduced. It was a small increase on the real estate transfer tax, which I believe worked out to, at this percentage rate, about $100 for $100,000 purchased home. The ordinance for the 40 million, it was $100 million bond issue. The loan program had a reservation, if you will, of 40 million of that, and Karen spoke to the grant with the 60 million. They selected lenders because if you don't have lenders, you can't have a program. And then we selected nonprofits in August of 2018. We had a soft start to see how it would go in fall and winter, if you will. And in spring 2019, we had a public launch. And as we all know, in 2020, we had a pandemic that we're still working through. So some of the key features of this loan program, and I will say this was truly a collaborative effort. Public money to fund loans. It was about 34 million when you take away as a taxable bond issue and the costs within that. What's the loan size? Maximum was 24,999, and the minimum was 2,500. Karen did mention it costs the same to lend $2,500 as it does to lend 24,999, which was keeping us under prevailing wage, and some other issues that tie in with that with these dollars. And 2,500, we asked for that low amount because we believe that that was if you just needed a roof, and $2,500 is a lot of money to a lot of people. 3% fixed interest rate. The bond dollars help buy down that interest rate. It's really a low rate, especially if for a term loan, if you will. It's subject to change dependent on federal rates, but the goal is not to have it change for as long as possible. And it's fixed once you get this 10-year term for the loan term. Minimum credit score is 580, which is obviously below market. Most banks won't look at you at below 620 and lend you money at a rate that's reasonable. And the maximum AMI was 120%, which is, I don't know any program that goes this high, and it really makes a big difference in the capacity for people to take out these loans. It may sound like, wow, that's a lot of money. That isn't tons of money when you have two adults working, maybe a car, maybe kids are in parochial school, or you have student loan debt, or you're taking care of health bills and issues. But so this was a really big number that we're thrilled that we've been able to maintain that. And we are continually evaluating it. And I will tell you, we are just last week, we finished making some tweaks to the program, and we keep making tweaks as needed. COVID made some changes for us, and we continue with that. So we wanted to have no wrong door. That meant that the nonprofits were the front door, meaning when you come into a nonprofit, we have wraparound services that we can offer as credit counseling or home ownership counseling, or we can refer you to other organizations that may need to help you with something like a cloud on your title. Lenders underwrite and service. Nobody wants to be in that business. The banks know what they're doing. We let them do their job. Public dollars can only be used for the homeowners who qualify for the loan and close the loan. So it's not just hanging out there. And we fundraise to deal with folks who are not quite ready for that loan, to do, as I said, housing counseling, credit counseling. There may be other issues around the home that we need to deal with, and that's just not covered with the monies that are available to us right now. So program design, the contractors have got to meet, they need to be licensed. We're doing our best to find contractors and provide a list of contractors who want this work. Not the easiest thing in the world. Everyone's in their home. Everybody's looking to repair things. The homeowners select their own repairs and adaptations. We do ask that the homes be warm, safe, and dry at the end of the repairs. If someone has a home that really doesn't need any health-related repairs, and they want to redo their kitchen, they redo their kitchen. That's just fine. Um, there we go. And we, as program intermediaries, do provide some technical assistance from the loan application through construction, telling folks, people will ask us, is this a good quote? Well, does it explain what's going to happen? And do you think it's a fair price? Yes. We're not going to tell you what to do or who to hire. Some things to keep in mind: the program design, everybody has slightly different goals. I will say the one thing about this program is that the political bodies, the advocates, the participants, everybody's goal was about the same for program design, was to get people's homes into better shape. And that was just, it was sort of radical common sense, if you will. Contractors, availability, their desire to be in a program, to meet city requirements, to carry their payrolls. That's huge. So we worked with the city and they agreed that we could offer up to 30% deposit on a project if the contractor wanted it. And that makes a difference. We have a lot of small contractors in Philadelphia. There's a great opportunity for them, one house at a time. Homeowners, do you have them? Yes, we do. Are they willing to take out a loan against their home? Many are. Can they meet the city requirements? If we coach them through it, yes, most of them can. And can they qualify for a loan? We are pleasantly surprised with how many people are able to apply and qualify for the loan who are at 30 or 40% of area median income. We never would have thought that when we started out. Wasn't our original intent. But if you own your house outright and your expenses are basically your utilities, your taxes, and other, living expenses, perhaps you're retired and maybe you have a pension, you can afford a loan. So this information is from the first year, and that was March to March. And just as we were getting our legs under us, just as we were realizing what we needed to do and maybe make some tweaks, we had already made some small tweaks in the summer of 2019. The pandemic hit, and it was just destabilizing at a level that I think most of us understand. But in the first year, we were able to have 53% of applicants were approved for loans. 140 homeowners pre-qualified for a loan for a total of $2.6 million pre-qualified. 91 loans closed, 1.6 million in home repair investment. Average AMI of 60%, which was about where we thought we would be. What was really surprising was the credit score at an average of 711. That's fantastic. And at the end of the year, we had 446 people in the pipeline. This is from the annual report. This is on the Philadelphia Housing, it's on the city website under PHDC. And we are currently just ending our second year. And we don't have numbers yet for this. I tried to get them in time for this one. I'm sorry I couldn't. But we have people calling us every day. Hundreds of people want this. So it's just about getting them through. And as I would like to say, I always like to finish with a little bit of the story. And here are some of our, as I like to say, happy homeowners. The woman on what I'm assuming is your left, it's my left, she just wanted, as I said, kitchen and bathroom redone. And she was able to do that and thrilled to do it. The woman on your right, you can see she's standing by her exterior wall and her front patio, both of which needed some help with concrete work and to prevent water entering into her ground level, which is super about like stability of the home. This client wanted, I put this photo up and everybody always laughs at me because I think this is the most beautiful boiler I've ever seen. I'm like, this is fantastic. Isn't this great? And someone's like, what is it? But, basic systems being repaired is really important, and people don't want to wait even if they qualify for the grant program. Some people don't want to wait for it. They want to be able to get moving and also do some other things at the same time. And this was windows, doors, and this furnace. So this I believe this is the client that when our assessor came in and get to evaluate the home, she said, I've been waiting years for you. This program is just what I've been wanting. Thank you so much. So thank you for your time.
All right. So with that, we are going to move to question and answer. And I think we have time for 2, maybe 3 questions, but we'll see. I'm going to go ahead and just kick us off, since I've been kind of managing the Q&A box thus far. I'm going to pose it to our group, and if you all have, as you guys have responses, please feel free, or as you all have responses, please feel free to chime in. But the first question that I would love to pose to you all, and I'm paraphrasing, but someone writes, how were you able to get the credit score down to the minimum of 580? Did the underwriters allow you to set your own credit score criteria? We'd love to make that policy change here. Thank you.
I can take that. That was a conversation. It was a deep conversation with the city, because the city buys the paper. They were willing to go that low. So we had to speak with, it had to be approved at many levels, but that's how we were able to do it. So the bank didn't identify it. It was the city.
And I think that one of the compelling things, one thing that we should just tell you is this is really politically popular as a program in Philadelphia. And bringing that credit down, once they saw what the average credit score of a person of color was, who was a homeowner in Philadelphia versus a white person, if it was at 620, which is what we had been talking about for a while, it would have excluded a huge percentage of the homeowners. And that was a compelling argument as well to get it down to 580. We were fighting for 560, but 580 is great.
And also using the data that we had on the denial rates and who was being denied loans and for the amounts and their credit scores. So that was also very eye-opening.
Awesome. Go ahead, Payton.
I was just going to call out one other question. There were a few that were related to identifying contractors. And one was directly connected to, if we're getting, if more funding is coming our way through stimulus, how do we get those dollars out the door if we're experiencing contractor shortages? I don't know if either of you have responses to that first. I'm happy to add some detail.
I think that I would love for anyone, if anyone has ever had a contractor show up at their door within a week of you calling them, please call me, please email me and let me know how you did it. It's a perennial problem, but we also do a lot of coaching with folks, and we also are doing outreach to trade organizations of small contractors and trying to just let them know that these funds are going to be out there. Do you want a part of it? Please, step up, raise your hand. We'll put your phone number out there for you.
So I think we have time for one more. And I'm going to paraphrase this a bit, but this is someone who is coming from the context of Detroit. They work at a nonprofit. They see a lot of the home repair issues on a daily basis in their work. And what they say is that for low-income homeowners, the existing programs are either insufficient to meet the need or inaccessible. If there's going to be a new influx of home repair funds, how do we ensure those dollars can be rapidly deployed to fix urgent repairs for the most vulnerable, especially when faced with contractor shortages and rising material costs?
That's a very big question. I'm happy to kind of jump in here a little bit. A Michigan person. I do know there are a lot of efforts in Detroit with different partners trying to solve that exact question. The city's thinking about it. Other nonprofit partners are thinking about it. So I guess my response would be encouraging you to make some of those additional connections and find out what is being discussed and thinking about the diversity of programs and where there may be still outstanding gaps, and talking with other partners about how those could potentially be filled. I'm happy to follow up directly as well. I know we don't have much time.
And I think with that, we are, I think, at time. I first just want to say thank you to our speakers. As you all know, it is always a pleasure to hear practitioners on the ground. I really enjoyed the presentation today. So I want to say thank you to Karen, thank you to Jill, and thank you to Payton for doing a lot of the work and organizing and bringing us all together. And lastly, I just want to say thank you to all of you who tuned in today. We will be sharing the slides and the recordings at a later date. We also will ask that you please take a moment to fill out the survey that will pop up in your screen as you exit. But with that, I think that is it. Is there anything that I am forgetting to remind folks of, Payton?
I don't think so. I think you covered it.
Thanks very much for this, but I would just like to say, I know a lot of questions maybe didn't get answered. Karen and I'll speak for Karen as well. We are happy to speak to anyone. Shoot us an email, shoot Karen an email, please.
Yeah, we can pull up all those outstanding questions, and then the three of us can pool some responses together and send those out maybe as a follow-up.
Absolutely. And I can happy to include that with my follow-up email in the next couple of days, or however long it takes. I can do a follow-up to the follow-up. So with that, have a great afternoon, and we will see you soon.
Thanks, everyone.
Thank you.
Thank you.